Okay, so these are moving average crossover approaches. But I'm also going to be talking about, if we have enough time, the T2s. But I also want to talk about, how do I know if there is a big move ahead? We trade the 233 tick chart in crude. We use the anchor chart of 610. And you hear about the pivots. It's very important to know about the pivots. And we hear this all the time. All right, I've got to ask you a question. You're looking at crude, and that is the daily price. And so here's a question. This is the low of the last several weeks. Is that important, this low? And the answer is, what do you think? Is that important that I should watch that price actually very carefully? Because if I'm going to watch pivots, well, I should also consider looking at the high and low of the daily, the high and low of the last several weeks. I mentioned this low recently. That's the low of the last 2 months. Do you think that would be important to know about that price? What do you think? Of course it is important. How do I know? It's pretty darn careful now. I guess that is important. Extremely important. We're going to be talking about the T20s, T21s. We're going to also take a look at our bounces. Do you think during this huge collapse that that's pretty important? Exactly right. Those highs and lows provide structure. Also the trend. We're going to take a look at gold as well. So yes, that is extremely important. I'm going to be talking about recently today's pricing. That is the low of yesterday. That low was 47.90. 47.90. Was that important? Absolutely. It's just as important as pivots. It's just as important as Fibonacci's. Let me show you why. Here is the low of the day. What kind of orders are right there? What do you think? What kind of orders do we all see in the chart? Sell stops. So when prices comes down and it comes very close to the lows of the day, what kind of orders are going to be hitting? Sell stops. What does a stop order do? If price hits, it goes at market. And so they are going to go sell, sell, sell. And do you think price, if they do that, they just go gently over the night? No, they come down, especially if they're fairly large. Well, they're pretty large if they're putting sell stops underneath the low of the previous day. So let's take a look at that. Again, guys, was that important? This highs and lows? Yes, it was. Was that the low of today? Was that important? Yes, it was. How do I know? Waiting for my chart to get there. Wow. Okay, sorry about that. Okay, let's take a look. We are now hitting right in here a 34B, and that is just underneath here is the low of the day. So let's think about this for a second. The low of the day is 47.90. If it goes down and hits just a little bit more, I'm going to watch prices go down more because of big sell stops underneath the low of the day. So what do you think? Should I take a $80 profit, or should I just maybe, look for a bigger profit objective this time, because it may break? Well, what do you know? It broke below the 47.90. And in fact, it came under there. What I'm going to show you right here, this area of the chart, as prices move down, 15,000 contracts were sold. 15,000 contracts. So yes, Could I have made not just $80, but maybe $180? And you could do that quickly because you knew that sell stops were just underneath the swing lows, the low of the day. I'm going to show this to the chat here. Ask them, any questions about this because it's extremely important. The reason being is I want everyone to make more money during our trading. And you can do that if you, what I sometimes call looking at the whole board. If I knew that there was a bunch of sell stops just underneath, I'll give it a shot for not a smaller profit objective, but a bigger one. Then let me show you another one. I'm showing you here, these little dots. We talk about trailing stop losses. That is 3 average to range from the lows above. So I had another nice trade here. And the market is really starting to move now, didn't it? So we're not making $8, $100, $80, $100. That's 10, 20, 30 cents, $300. The market is bouncing up. We now have another bounce. We're going to be talking about the T20s pretty soon. And you can see the sideways is price movement. It's now starting to fall. We've got the T20 candle. These little black dots are the T20 in regards to underneath the 8 exponential or above. And I'm going to be talking about the use of that for a trade. Here we have a 89 bounce. And the market is starting to go. You could use an $80 profit objective, or you're looking at a $200 run, a $250 run. And at not all the time, but when you see a strong trend, go ahead and look for at least an additional 100, 125, 125, 130. I'm thinking of different markets. So I'm going to be talking about this a lot in the future. You're looking at here when we had this bounce and we're starting to move. I'm going to be talking about the T20 now. This is the T20, and I have a PowerPoint, and I've actually done another video on this one. The T20s that are the best trades is when the 8 exponential is underneath the 34 and the entry is underneath the 89 exponential moving average. In other words, I like taking the T20s in the direction of the bearish trend as defined by the 89. I don't want to take a T20 when I'm right in front of the 89 as a potential 89 bounce. This is what I was talking about in regards to the conflict between the T20 and the T21 versus the 89 bounce. As it turns out, when you have a T20 in front of the 89, which of the two do you take? You take the 89. But if you take the T20 underneath and you see that you are back in the direction of a strong bearish trend, the 200 is sloping down. The 89 is sloping down. The 34 is sloping down. Are there times that do I want to take an 8-cent profit objective? There's your $80. There it is. Okay. But I see instead the market is really going to take a hit here. The momentum is strong. The moving averages are all strong. They're all falling down. Why don't I look for at least not $80, but at least $150? Maybe I can use a trailing stop, as I mentioned, of 3 average to range above from the lows. And so I'm not making 80. I'm making one, two, $300. That is how you improve your total results. Here is a T20. I'll be more specific about this. Here is the T20 again, just in front of 11 o'clock. And again, I could have taken 8 cents, but I'm now breaking all of this support. And look at the moving averages again. Here they go. So again, I'm at least another $100. And in this particular case, I could have maybe had another $100. So I'm discussing this a great deal is because I want you to make as much as you can when the market is in your favor, but you are going to have to take a look at what I call the whole board. And there are times that you don't have to take a trade for $80. There are times that you're going to easily quickly go, well, there's a quick 100, 150. Here it is again. Here's a little break right here. Here's the 8 above the 89. Well, there's a quick 100. Here's the 34 bounce. Super strong. That's a quick 150, 200. I keep 150 because the market is so strong. And there is a way that you can improve your total P&L if you look at the market, see a stronger move, potential. And the reason I say potential, well, John, we don't really know ahead of time that the market is going to run that high. I just don't know. Well, you're right, but I don't really know if it's going to hit 80 cents, $80 either. Not for sure. So in regards to that argument saying, well, I don't know if it's going to move a $150 move. No, but the question is, do you think it's going to bounce more than that? And when I say bounce, and if it's going to run into my profit objective, is there an increased odds that it's going to increase my total P&L? And I'm about to show you a little bit as to kind of an idea of how do I know? I know that a lot of you don't look at the price action in regards to time charts. If you do have enough basically monitors, take a look at that very thing. I'm showing you a 15-minute chart, and when we take a look at the bounces, I'm going to be talking about look how far away when prices get underneath this moving average. Now, we totally understand that in regards to the 233. We totally understand that in regards to the 610. In other words, the market is, quote, oversold, even though I don't particularly like this word. But nonetheless, if prices really falls down, where do you think the trouble is going to occur in regards to the 233 bounces? Down in here. Selling the 233 bounces when the market is relatively new is fine. But now we're beginning to see some bounces that is not working too well because it is way too far underneath the moving averages. And because of that, move this back a little bit. This is when we're looking at the 233. When you only look at the 233, you're only looking at an hour's worth of trading. And remember, that's on one full screen. Probably many of you, because you have one workspace, one chart, you probably are looking at on the 233, it may be only looking at 30 minutes, sometimes only 15 minutes worth of time. So you don't get to see how far prices have fallen in a 233. You need to look at something else to know how far has this gone in the last 3 hours, 4 hours, 2 hours. You can't see that in a 233 tick chart, especially if you only look a small little areas. So as you can tell, this is where the prices are beginning to have some problems. Now the 34 bounce is a loser, and you're beginning to increase your losses because the price now is going to have a larger correction. But how am I going to know? I can't really see that in a 233 tick chart. I might be able to see a little bit more in the 610, however. Now what I'm doing is showing you the 610, but I want you to look further away. Again, a lot of times people will they'll look back here and they'll not see what's going on in regards to the whole board. They'll have where you can see larger candles, but I can't see what happened in the last several hours beforehand. So I'm going to show you that, wait a second, if you're not going to use the time-based chart, then okay, go ahead and use the tick chart of a 610. But take a look now about the prices when they are severely oversold. This is where the 34Bs begin to lose money because it is way underneath the 89 exponential moving average, way down here. So the 34s are losing money. Take a look now between the lows and the 89, how large that gap is in price. And guess what? Here come the 34s. They begin to lose. Way down here, look at the difference between the 89 and the lows. Guess what happens? The 34s lose. The 89 loses in regards to the 233 tick chart. I can tell that by looking at the spread between the 89, which is the equivalent of a 200 in the 233, and know that I don't think I want to take the 233 bounce when it is severely oversold. Take a look at the difference between here, the 89 and the highs during 11:30. So what do you think? You think the 233, 34 bounces are going to pay off? Oh no. Oh no. You're going to have losses if you try to take those bounces in a 233 because it is going to have a longer, larger correction off these highs. How do I can able to see that? Take a look of more time, higher time periods, or if you want to use the 610, then look at the differences between the 89 and the highs and lows of the market. This, believe me, if you do that, you're going to reduce your losses amazingly because now you're only going to focus and the market is in your end, but not oversold or not overbought. This is now because of that. Remember that Ray was talking about. That's what he means when he says, what if I've had 3 or 4 winning trades in a row of the 233 tick chart, either the 34 or the 89Bs? Well, the whole idea is it's probably going to have a larger bounce from the lows. Well, another reason to know that is if it's severely oversold, then I'm ready for a particular trade or bounce away from these lows. Any questions here? And then I want to talk about the 610. I mean the T20s and the T21s. Any other questions? Again, I'm hoping that this helps. Take a look at the 610. Look at the slope as well as how high or low the current highs or lows from the 89 exponential moving average in the 610 chart. If it is severely oversold, then be very, very careful about taking a 233, 34 bounce because it's going to probably get oversold. I mean, stopped out. What you're seeing here is, let me go ahead and change these colors here. Just a second. Change one of them to a little different here. You can enter by itself because this is important. That is all you're using in regards to the T20. You're not really taking the stochastics. You're not using divergences. You can take a look at pivots potentially, but it really is just a crossover moving average approach. If the 8 is above 34, I'm looking to buys, and if the 8 is underneath, I'm looking for sales. But what I'm talking about is adding a condition. I'm looking for taking the trades in the direction above the 89. Again, this particular type of trade is not really a very good trade to only take 7, 8, 9 cents. This is a relatively new trend, and so the profit objectives here should be much larger. Here you're looking at taking the T20 by itself. That's 100. That's 200. Now, it doesn't mean that you're not going to see some difficulties when you have previous resistance. This blue dot is a 8 underneath 34, but it is in front of the 89. That's why I mentioned that we're not going to take T20s in front of the 89. What trade is going to resolve in regards to the conflict of 89 and the T20? I want to take the 89 bounces, the buys, not the T20 sales. So we're going to ignore the T20s when it's in front of our 89 bounce. And sure enough, here it comes. But if you're only looking at, again, the T20 by itself, that doesn't mean that, well, I see here I've got a double top. So I think that prices are going to potentially have a setback. And sure enough, they do. But notice about this prices right in here. We haven't a 34 bounce here. But in this one, that is a 34 bounce. That one would have been lost. If you had 2 ticks underneath that low, that would have been stopped out. And then it comes back again, 34B. And this particular case, even though it would have been very, very close to being stopping you out, in this particular case, it did not. You would have been able to survive this and make profits there. But the point being is take a look at the 8 exponential moving average all during this time. It is still above the 34B. I mean, the 34 moving average. In other words, there was still no reason not to change the trend based upon the 8 and 34. Here is a 34B, and sure enough, it comes right into the highs. We have a double top. MACD, you almost always will have a divergence when you have a double top or double bottom. It's extremely unusual not to have a divergence when you have a double top or double bottom, not with the platinum MACD, because the MACD platinum is very sensitive, and so it's very easy for them to have a divergence. Here is our T20, but it's above the 89. I'm not going to take that one. But what you're seeing is I'm coming down here. I'm now getting back into this area of the chart. This is what is known at times as T20-1. But even that one, I'm not too happy about that one either, because I am more interested if I take a T20-1 underneath the 89. And here it is. It now breaks the 89. That would have actually been a T20, excuse me, a 89 bounce, and that would have lost because that close was above the 8. So prices are now underneath the 89 and the swing lows. We now have 2 candles. So in other words, we now have a correction bounce in the direction of the moving average crossover. And again, do I really think that is the best way to make money, is to make an $80 move, considering it is a brand new trend? Now, there's a difference if I've taken a trade and it's been bearish now for almost an hour and have had multiple bounces. But this is a brand new bearish trend. And you're correct. I don't know whether or not it's going to do that, but that doesn't mean that I can't at least see if the market really does to fall. Why? Take a look at the 34. What's happening to the 89 down? It's moving down. What is the 200 doing? Getting flat. So in other words, is my bearish direction getting more and more confirmed? And the answer is yes. And so I think I'll let that run a little bit. Or instead of an $80 profit, okay, I'll go for 150. Okay, take it, but at least make a little extra when the market is in your right direction. Or when you have more and more contracts in the future, because you are going to become really professional traders. Take what is known as, sometimes they call that as the money contract. I'll take partial profit in one of my contracts. Bruce Babcock created that created that name many, many years ago. The money contract, the one that's nearby, quick profit. I'll let the other one run and I'll use a trailing stop. Well, one of the trailing stops you can use is the 8 exponential. In other words, if there's a close above the 8 exponential, I can use that as a trailing stop. I will tell you that that is easily triggered. If you really want to catch a large run, don't use a close above the 8 exponential because you're going to get stopped out easily, such as here. The reason, and just take a look, that is your whole day. And did I know that was going to happen? No. But I used to have a strategy of perhaps letting it run. And in this particular case, sometimes it'll run, sometimes it won't. But when we have now larger price movements, then what you're seeing is one of the reasons that I was very happy that with Ray on saying, no, let's keep focused on crude oil, even though it's been very, very flat for almost 2 months. And it was because I knew, based upon years of experience, it's not going to stay there flat for very long. I didn't know it was going to fall a $5, $6 fall. No way did I know that. But I did think it would get out of that flat price movement. I did think it would fall once we broke the lows of the last 2 months, but I never dreamed it would fall like this. But it did. So again, take a look at the T20s underneath the 89, the T20-1s, especially if it is new in regards to a new trend. Here we have finally a fairly large bounce here. Do I want to take the T20 going long? No, it's underneath the 89. Here is the T20 back in the direction of the bearish trend. That's what that blue dot is. And so you're looking at an additional run. In this particular case, it would have stopped out for a little bit of profit there. I mean, if you use a trailing stop. But the thing is, instead of $80, you're looking at anywhere between 100 and 140 profit objective. I didn't see this, but it just has happened while we were talking. What do you know? Here is the T20. You're making $80. Here's the 34. That's a very nice 34 bounce. I could have easily made $80. Well, yeah, but you also could have made, with some kind of trailing stop loss, 1, 2, 3, 4, 5. What do you know? That's in that little run right there. That's more than $500. That several of these trades today made your week in this trade. So I know I'm sometimes I'm howling at the moon. There are times that you need to take a larger profit objective, and it's actually going to help because you and I both are going to have some bad days. How do you pay for a bad day? A good day, and especially if I can make one of moves like this. This is the 34B, and let me pull. I need to make this a little larger, make it easier to see here. It's now moving down. Prices are now getting underneath the 89. The 8 is still underneath the 34. This has a nice swing. I wouldn't necessarily have some of our members say that that's a 34B because it is touching the 34, but it's pretty flat. We didn't know that. You didn't know it's going to fall like this, so you may not have taken that 34B. But as far as a T20, that's a T20-1. And you can see that it's really starting to move. Again, prices move into the 34 bounce. That is a close underneath the exponential. That meets all of our strategies conditions, 34, 89, 200. And I'm showing you here, here's a little bit of profit objective right here. But also you're looking at the price start to move down and whoa, and there goes an additional 150 bucks. And you knew that it was potentially breaking down for another reason. Look how this price is now really get to go. How do I know that that was going to fall? Not for sure. Let me get some information about this little price fall here. What do you think is going on with gold today? Well, it's now moving underneath the longer term trend moving averages. It was going very strong and having a bounce, but a very weak rally. Do you think that the low of yesterday is important? Well, John, you already said it should be at least as important as a pivot. So I think it does. What happens underneath those lows? They're probably sell stops. So is it going to be just, 50 contracts, maybe 100 contracts, sell stops? Oh no, much larger. It's more important. It broke the lows. And what I showed you in regards to the 144 tick chart, that fall that went straight down was a break of that low. Therefore, could I have made a profit of $80, $100? Yes, but I might have been able to make a larger profit objective because it was becoming more important, because the prices aren't just breaking a small little area. It was beginning to break in a potentially new bearish trend. And because of that, you might have been able to reach a larger profit objective. Not all the time, but just from time to time.